It's funny, every time I say it's going to be a slower day, it ends up not being a slow day. So let's review yesterday's price action. So from my review yesterday, I was talking about how I thought today would be a little slower, and that was because we opened right around yesterday's close, and we opened within this trading range we had at the end. So based on the price action, I would be expecting a slower day. Now, obviously, there was tariff news, you know, deals with India and the United States, so that was bullish for the market. That led us to have a pretty strong bull trend today. But what I was talking about, and I'll demonstrate it again. So I thought there'd probably be sellers above this trading range. So probably sellers at this high right here. So, and what I discussed in yesterday's video was that there's probably going to be sellers above this, and what their plan would be they'll sell above this high, and then they'll sell again below a bear bar, so something like that, and that's how they would scale in. Now, clearly they ran into some trouble here because it did not come back to their first entry, so they were not able to exit break even. Instead, they were stuck long here again. Okay, so maybe they sell more higher, or maybe some bears take their second short here. Either way, once again, still they're stuck in this bad trade. They're short, and now they've scaled in, and now the market's pulling back multiple times, and it's not coming back and letting them out. So, regardless of the tariff news, let's just exclude that, and let's just look at just what the price action was giving us. When you see the price action and bears had a place to be short, and now they're scaling in, and they're not able to get out like this. So you have the tail comes down here, and we have tails coming down here, and the market just ends up higher and higher every time it pulls back. Well, as a bear, at some point you have to say you're wrong, right? We know any trade is going to have a losing trade eventually. Any strategy, any style of trading, there's no way to manipulate a trade to be perfect. Now, there's ways to scale in and increase your odds by a lot, but anything you do can lose. So sellers above here, they realize if they scale on higher, so that they sell here and then sell higher up here, that increases their odds, but at some point, maybe 10%, 20% of the time, they'll have to take a loser. So this would be one of those cases. So at what point, so how do you manage it from here? Do you exit at some point? Do you just let it ride and hope that the market will pull back? Well, not the second one, because the second one that's how traders mess this up. So it's reasonable to sell here. It's above this prior high in the trading range. Possible opening reversal as well. So it's reasonable to sell here. It's reasonable to scale in higher. So let's take this bear bar. Let's take this second sell, because this was a little bit better of a sell, because now we're more of a double top here. So you sell here, sell more higher, and then you see the market pulling back with this tail lower. You see it pulling back here and pulling back here, and this was also an attempt to go lower. So you see all these attempts to go lower that keep failing. What a non-profitable trader would do is hold on and let the market just go against them, and they get crushed. What a profitable trader is going to do is going to say, all right, market's moving up. I'm probably on the wrong side here. I need to take the loss. So where will they take the loss? Once again, after you see these multiple attempts go lower that are failing, and then two ideas for where to exit would be above this double top here. So first low, second low, and then above this bull bar. And another idea would be above this triple bottom here. So double bottom, triple bottom, and above this bull bar. Okay, so as someone that's watching this, whether you're already short or whether you're neutral and thinking about getting long or maybe short, this is something that you want to keep in mind. You would say, well, bears probably would have shorted above here, and they're probably trying to scale in up here. Or this would be where they would take their first entry, and I could see that they would start to feel trapped in this area. We're getting these tails, but the tails are end up being higher and higher. Now we're getting double bottoms. Now the market's touching the moving average, which is going to act as support. So you want to look at this and think, this is where the bears will be exiting, above a bull bar around the moving average like this in a double bottom. So if you're a bear, you should be thinking about getting out above here or above here. And if you're a bull, for that same reason, you should be thinking about getting in. So I think it's reasonable to mark these as buys. I think this first one, it's okay for, I think you should try to go for a swing. But the second one here, now that we have a stronger triple bottom here and this good bull bar, I think that's good for a swing or for a scalp. I think the odds of a poke through above here are good enough that you can just go for 1-to-1. So you'd buy above this bar, put your stop below it, and you get out somewhere up here, and your odds are probably 55 or 60% that you'll be able to get up here before you'd be stopped out below down here. So what is the market cycle looking like? Well, this first move up, we'd consider this a breakout. These 10 or so bull bars fairly in a tight channel up. So we'd call that a breakout. And then it's pretty easy to see the channel up from there. So you have a couple highs here, you draw your line in. A couple lows through here, you draw your line in. So there's your channel. You don't need to draw in the channel, right? I mean, we can see it's bull trend. We see the bears are failing to go lower. We're stuck above the moving average. So we want to look for buys. And one easy thing to do is try to look for pullbacks to the moving average. So what we have here, we have a couple highs. Okay, so high here, double top. But market breaks out above it and pulls back. So now this is a breakout test of this level. So bulls will look to buy above here. I'm not going to mark it as a long because I'd rather see another test of this level and closer to the moving average. And this has this big tail on the top. Also, you'd be buying into the top of the channel if you bought up here. So I'd rather wait and get some kind of double bottom test of support before trying to go long again. So we have this support and resistance through here, and we see it comes back down, tests right there, touches the moving average. So I think that's a good place to try to go long there. And similarly, buying here above this bull bar. So pull back first entry, pull back second entry long, micro double bottom at the moving average, so that's good for long as well. Now how about this bear bar at the end? Let me make the bars bigger here. How about this bear bar? What about selling below that? I mean, think about it. We have this channel, now we've broken out below it. Now we're coming up and testing it, and we're testing the moving average. So what about selling here? I think you should avoid trying to sell there because it's the first breakout of the channel. Okay, so when you get a breakout of the channel, you should try to test the highs. So right, the high is going to be up here, or the top of the channel. So really, we would want to see a retest of somewhere up here first before trying to get short. Sometimes the market doesn't pull back all the way, and we would consider it a test even though it doesn't pull back. But is this enough of a test of this? I mean, not for me. Now, if we got a double top here or some kind of wedge top, I think that'd be good enough to call a test up here without actually getting up there. But this is just a first breakout, and it's a pullback, and that's not enough. Where you're at in the market cycle, we would be thinking more of a trading range here now. So breakout, channel, and now we've had the breakout below the channel, so we would start to think that we have probably next stage is some sort of trading range. So what some traders might do is they'll sell here, and either they make money immediately, or they can scale on higher and at least be able to avoid a loss. But once again, I think it's better to just forget all that and just say, first breakout of the channel, not good enough. I'm going to wait for a test of the high before considering getting short. So to me, this is not enough information yet. And then at that point, you're kind of too late in the day for much else to happen. So this day ended up as a big bull day, even though around here I was saying I thought it would reverse. And I think what the key is there. So yes, I was saying I wouldn't get long around this area, but I was also saying I wouldn't get short. And just because you think the market might reverse in an area is not enough of a reason to actually bet against what's happening and bet on a reversal. Right? You really want to see that reversal setup happen first, and then you could get short. So we really never got a reversal setup. Like we talked about, maybe it'd be reasonable to sell here. Then you would have needed to exit pretty quickly. And so your possible reversal would have came up here, not down here. Right? So even though I was thinking based on prior price action that the market might reverse here, it hadn't happened yet. So I'm not going to hop in and try to bet against these 5 or 6 bull bars that are forming. So that's kind of a tip there, is that you'll have all kinds of feelings and intuition about what might happen. But until that setup forms, then you should try to avoid it. Like, I understand the temptation to want to get short during this because you think, oh, it's getting far from the moving average. How much farther can go? We're above these prior highs over here. We'll probably reverse soon, and there's a good chance he will, but there's also a reasonable chance that it won't, and this trend will just continue up. So it's okay to avoid getting long if you think it's gone too far, but that does not mean it's okay to try to get short. So here's the daily chart. The low of the week is down here. So this is the low. It's 400 points below where we are now. So today's Friday, which is why I bring it up, unlikely to be able to pull back down to that low today. We'll see, are the bulls or bears, but what can they do on this Friday? Are they able to create a tail on the top of the bar? Or are the bulls able to have another bull day and have a strong bull bar on the weekly chart? Right? Because the week opened here, a little tail on the bottom. Now, are we able to have a strong close up here? Or are the bears strong enough to be able to create a tail on the top of the bar? And whichever happens will give us information on what's more likely next week. Because if there's a big tail on top, that means the bulls were not strong enough to close on their high. And it also increases the chance that there'd be sellers above the high of this week, next week. So that's kind of what goes on Friday. And it's important what happens in those last few hours of the week, because it determines how the weekly bar looks. All right, so we're going into the weekend. Hope you guys have a good trading day, and see you in the next video.